Market conditions majority bullish, 13 and 1. We've ticked down just a little bit here out of that 14 range now. Have one bearish trend that's starting to emerge on the S&P futures. The support range that we're looking at is going to be around that 63.70 range, watching just the upper end of this demand block, see if we find some support. If we were to pull back and retrace and hit that level, there still certainly could be some continuation to the upside, but we've got an expanded trend starting to soften a couple of different times here, just feeling a little bit heavy at these levels. Let's take a look at the breadth of the market, currently seeing that at 63, so a little bit of strength here. The compression, it's actually flipped back to majority bullish. That when it's compressed like that, one strong day up or down can move that, can really turn that indicator when it's like this. But those compression points are decision points when you have compression and expansion. So we've got some compression here. We'll see which way we can push and start to move, and if we have a little bit more upside here, we certainly could see some, just a slower uptrend where we're getting less up volatility. That doesn't last forever. The lack of volatility typically forecasts future volatility. So when things are quiet, it's typically anticipating noise, is anticipating some volatility. So we're at that range. What we could see is a compression. You see how these lines are all really tightly compressed. That's just a long indecision period. And then we ultimately got the tariff scenario, and now we're at the upper end of this trend right here. Typically, just paying attention to risk, where are we at in the trend, being aware of position size and stop loss management for shorter term individual holdings. If you're a longer term investor, obviously it's going to be a lot slower moving process. Going to be focusing a little bit more on this price pattern over here in terms of position sizing. What percentage are you going to be in equities? 40%, 50%, 70%, whatever that longer term allocation is. You can use this longer term chart to say, we're at the upper end of the range. I may want to reduce my exposure to equities as a whole by X% and moving over into something that, like cash. Primarily our models are equities, either long or cash, and this could be a way to be able to look at that as well. Let's continue on here and take a look at VIX. We're seeing that spike a little bit, not much, a little bit today, 1%, but it's back up above that 15. You're seeing it's kind of corresponding to the S&P futures, where you're getting now 13 bearish and 1 bullish. Okay, just like you're seeing the opposite here, 13 bullish, 1 bearish. VIX is that volatility or that fear index, which we haven't seen. We haven't seen it spike. There's just not fear yet. There's not fear until there is fear. It shows up all at once, and so we want to be positioning when there's not fear. And so moments like this are giving us a little bit of a clue that there's something softening. Could it pull back and find some support and move higher? Yes, it certainly could. Could it continue and retrace still inside this upper momentum zone back to that 6100 range? Yes, it certainly could do that as well. Just a couple of scenarios to consider where we're at in the trend. We're seeing Dow Jones Industrial Average making a valiant attempt to break out and get new highs and get up above this level. It's just struggling to do that. A little bit of a topping tail bar there yesterday. We'll see if we can break out of that. If we can get a good solid breakout, we may see an expansion of this trend as it's pausing. That's also helpful for a little bit of rejuvenation towards some upside here. Triple Qs still in the upper end of that range as well. Let's start pulling some of these over now and looking for some retracement. There's another demand location that's right here, right where it's at, and we'll see if we get some support there. This one is also moving a little bit more aggressively this morning than some of the others. We've moved back to 12 and 2 versus 13 and 1, or even 14 and 0. So getting a little bit of bearish activity again at the upper end of these ranges. IWM, let's take a look here. That one has yet to turn. We've seen some strength in small caps in that Russell 2000, and that's still continuing to show some strength, but it's got a massive supply block above it, meaning it's somewhere price activity has been before the selling took place. Couldn't maintain it, lots more selling, so we're back to that area where there could be some supply. It's a supply block because selling had taken place here before. Selling, it could be an area where institutional traders and investors are interested in selling and considering this a high point in this current trend. We'll see it. We'll see what we get on Russell 2000 USO. Let's take a look here. We've been hugging that 50% retracement, still doing that. It looks like that 72 range, 2 or 3 sessions holding that 50% area. Gold getting a little bit more weakness here. Let's take a look on the longer term with that. It was that 298 number that we've been sitting at now for a length of time. 298, 299. If I connect this low, then it gives me that 298 number. So still inside of that range, softening here. Nothing's changed. Just the upper end of this trend. Solid longer term trend still intact. We can see that on the weekly time frame as well. But just not getting any real confirmation one direction or the other. Still a very bullish pattern. If we were to get a retracement or equities were to sell off, that could push gold even higher than where we're at. Dollar showing some strengthening here as well, opposite of what the gold pattern is doing. 2-year treasury 375, majority bearish on that weekly time frame, still holding that overall pattern here, compressing now 14 and 0 on the daily time frame. 10-year is also majority bullish, still holding that tight consolidation pattern as it has been really for the last couple of months as well. A couple stock ideas to consider. There's not a whole lot. I've only got 8 in that list today. There are, you got railroads, you got NSC, which is giving a little bit of confirmation, not quite a breakout, but a good solid uptrend looking pattern. Seeing Wynn Resorts in the casino gaming space here, and also seeing MLCO, which is also in the casino space in China. So interesting that some of those names, railroads, casinos, and kind of hospitality are in those new trends today. So this number here, this A, that could also be telling us again that markets are softening a little bit, not seeing as quite as broad-based participation. We'll see what that leads into today. That'll do it for today's update. Everyone have a fantastic day today.